provide fractional CFO and capital markets support to early stage fintech startups that are Series C to Series B. And these are businesses that typically don't yet need a full-time CFO or a full-time head of capital markets, but they do need that strategic partnership and thought leadership on their team. So we solve for that.
Journey, what advice would you give to employees who aspire to, to start their own firm and become CEO? If you could share some key steps.
Yeah, I mean, it depends on your risk appetite, I suppose, right? Like for me, the first risk transition was from corporate into startups, right? I had, a house with a mortgage and 3 kids, and, I had some stuff, no money because I paid for the MBA, right?
Hi, Derek. Welcome on Narratives of Numbers. It's so exciting and wonderful to have you in our show today. For our audience, Derek is a CEO and partner in ScalePoint Advisors. So Derek, why don't you go ahead and give a brief intro, to our audience?
Sure. Yeah, I'm a partner at ScalePoint Advisors. We provide fractional CFO and capital markets support to early stage fintech startups that are Series C to Series B. And these are businesses that typically don't yet need a full-time CFO or a full-time head of capital markets, but they do need that strategic partnership and thought leadership on their team. So we solve for that. We make our professionals available on a fractional basis. So it could be 5 hours a week, 10 hours a week, to help them move the needle forward without having to, pay a large salary and equity and everything that goes along with making a senior hire at the early stage. Another problem with making senior hires early is that it can ruin your org chart, right? You have maybe a senior leader who's not fully utilized. So you bolt on other things like HR or ops or sales, and things start to become misshapen. So we help early stage startups deal with those problems.
Okay, that's wonderful. Thank you for your introduction, and we will deep dive more into your early career transition. So I opened you if you could share your journey as an audit manager at PwC and the diverse sector which you have worked in.
Okay, yeah, I started in audit with PwC in 2004 in the Edinburgh office in Scotland. So I trained under the ICAS program, Institute of Chartered Accountants for Scotland. So, standard Big Four audit trainee job. They train you up. My client base in the early years was a lot of fund management. Edinburgh had a financial services hub, so there was a bunch of that. My biggest client, though, was a nuclear energy production client called British Energy. They owned and managed nuclear power stations in the UK, and we were their auditors. So about half my time was on British Energy, BE we called it, and the other half was on fund administration, investment fund administration audits. With PwC, I qualified as a CA in 2007, and PwC were pretty good about global mobility. So at the time, there was a phrase called BRICS that everyone was excited about, emerging markets, Brazil, Russia, India, China, South Africa. And I had a connection, or a friend of mine who was a year above me, went to the Russia office, and he was really enjoying it, and they were looking for people. So I went to Russia for what was supposed to be a 2-year secondment. I ended up staying there for 6 years, 3 with PwC, and then 3 in a CFO role.
Moving to Russia and becoming a CFO must have been a significant shift, which I think you already talked about it a little bit. But how was your transition from a role of audit manager to CFO?
The CFO opportunity came up from a friend whose father was the general manager of this business. And this business was the Russian subsidiary reporting into London. And the London finance team really wanted a strong finance person, Big Four background, etc., that that they could trust, but who also could work in the Russian market, which is quite difficult, right? With language and different worldview and way of doing business, etc. So they wanted someone who could operate in that environment, but also give the leadership back in London what they needed in respect of the finance function. So I was a bit young, only 6 years into my career. I was still, I think, only 28 maybe, or something like that.
Oh, wow.
Not even 30 yet, and then put into a CFO role, which was exciting because making good career progress, at least in terms of title and salary, etc. But at the same time, was a function of just being in an emerging market where there's a shortage of professionals and you just get pushed forward. So leverage that a little bit. And then it was an exciting leap, but to be honest with you, there's a lot to talk about here about, like, it didn't really meet my expectations of being a CFO and being like a strategic partner to the CEO and adding all this value. Ultimately, I felt that I was just kind of responsible for some monthly corporate reporting, reclassifying some Russian accounting data into into US GAAP. It was for them, and it was kind of, the title was CFO and the salary was like not bad, but the level of the work I felt a little bit disappointed in.
Okay, so you were like, you were happy with the title, but you just felt like you wanted something more on your plate. Like, what motivated you, Benny, to pursue your MBA degree, and how that decision kind of impacted your career path?
So I was actually not really thinking about the MBA path, but I was playing squash with a guy, a Russian guy who was about to leave to go on his MBA journey to Chicago Booth here in the US. And he was also a CA, he was also a PwC person. And, I asked him, why are you doing that? You already have the CA qualification. And he explained his logic. And then I explained my situation, that, I don't really love this CFO role. I thought it would be more strategic.
Makes sense. So after doing your MBA, like, you felt that really helped you in accomplishing, goals which you had in your mind?
It totally did. So when I was there, I was able to at least, start to supplement my non-accounting and finance experience, right? Like, it's in an educational setting, but my resume going in was pure finance. My resume afterwards was like finance plus an MBA, right? So it's already starting to point in a little bit of a different direction. And then the getting a job at the end of my MBA, I was really focused on any of the big companies that had like a rotational general management MBA program, right? Like Samsung or Shell or Amazon. And I ended up getting an offer for Amazon that put me onto their retail leadership development program.
Awesome. I think that was a wonderful explanation, how you explain, like, how your MBA degree really helped you in achieving what you wanted. I'll try to deep dive more into your transition from a corporate role to become a CEO and a partner at ScalePoint Advisor.
Okay, yeah. So the corporate role was, I came to the US with Amazon from Luxembourg, and I came here to work on a couple of fintech teams. I was at a conference with Amazon, or on Amazon Business, and I met a guy who had just launched a fintech startup where my Amazon experience was like directly relevant. And they also needed finance experience as well. So like the background with PwC, etc., like came back in, like that plus my Amazon experience was like a hand in glove match for this startup called Resolve. Did a lot there. We raised a bunch more money, equity and debt. And then during COVID times, so COVID came around, up until COVID, I was commuting up and down from Seattle to San Francisco every week. I would fly down on a Sunday and fly home on a Thursday. And then when COVID came along, that stopped. We had to make some adjustments to the product at the startup I was at, and I was running risk, ops, and finance. So the risk and ops part, like the volumes kind of went down like a bit, like more than half. So I had some capacity, and I started doing fractional CFO work on behalf of a friend. He had a fractional CFO firm and had more clients than he could manage. So he gave me a couple of clients, and I started doing that in my as on the side.
That's really interesting. So you were already working in a startup and then you took another project.
Yeah. So fast forward that starting doing CFO work on the side. Fast forward a couple of years to like 2022, and I found that I really enjoyed that line of work, and I saw an opportunity to double down on it in the fintech space, where I had a bunch of operator experience, and now I had a bunch of CFO experience working for my friend. So I saw the opportunity to do it full time in the fintech space. So it was sort of it building up to it. Like my side hustle became more and more important, and I started to develop a love for doing that, and then through doing that, I saw the opportunity to dive into doing it, and focused on fintechs, which is what ScalePoint does. And it was sort of, there was a moment where I had to quit the job. I had to quit Resolve and do this as my primary endeavor. It was a little bit nerve-wracking, right? Because you're giving up a steady income,
Steady income, yeah.
or now I just have, I'm in business for myself. However, I would say there was actually, in my mind, there was an opportunity cost of staying in the job, right? Like if I stayed in the job, I kind of knew what was going to happen, right? Like I knew what my salary was going to be for the next 12 months. I knew what the equity situation, I was almost fully vested on my equity with the business. So I kind of like knew what was going to happen there. And the other opportunity on launching the CFO business felt to me like the upside was actually higher, right? So it's like less risk, but know what you're going to get. Slightly more risk, with the opportunity to get more. So from an income perspective, I already had a couple of clients that were pretty stable, and could get a couple of more, and I just knew that I would be able to substitute the employment income with the consulting income like pretty quickly. And then the consulting income can keep ticking up, whereas the employment income was, it was capped.
Okay, so what were your strategies to employ or attract your initial client? Because that's the most difficult journey.
So this is where my partner comes into the story. So I knew from doing CFO work, I was doing a lot of that in life sciences, and I learned the importance of having a sectoral focus, right? So like focus on life sciences, focus on fintech, because you need a lot of credibility in the space that you're operating in. And then I knew for fintech that, first of all, finance is harder for a fintech startup than it is for like a SaaS startup. The business model is more complicated. The financial structure is more complicated, right? So I knew there was work to be done in that space because I knew how hard it was. And that's why, so one thing was to focus on fintech. The other thing was, in fintech, there's often a capital markets dimension to it. So the fintech needs to raise debt in addition to equity. And the debt providers are a different type of investor. They look at different businesses differently. They're not, the equity investors are interested in like the story and the vision and all that. And the debt people are more interested in like the unit economics and the cash flows, etc. Different audience. So at some point I met my partner, years ago when I was at Amazon Lending, actually, and we stayed in touch, and I knew that he wanted to get into capital markets consulting to fintechs at some point. So I suggested to him, like, why don't we join forces? I'll tackle this from the CFO side, you from the capital market side, and we'll actually combine them into one offering for fintechs. So the way we've split up how we manage the business, like, he has got a really strong Rolodex. So he knows all the VCs, fintech focused VCs and debt providers. So he's got a lot of relationships that work for us there. And he does that side, and I do the operating management side of the business, the recruitment, the client, the execution, all the blocking and tackling that comes with running the business. And that's sort of how we divide and conquer.
So if you can tell, like, what were the major hurdle which you faced, like, during the initial phase of client acquisition, and how did you kind of like overcome those challenges?
Okay. So with client acquisition, I wouldn't say we actually faced much of a hurdle. I mean, there was probably some risk that I didn't feel enough at the time. But we ended up getting a whole bunch of clients, like, pretty much straight away. So the problem was not that we couldn't find enough clients. The problem was, like, there was too many coming at the same time. So it was more about, like, how can we execute on all this work and maintain, quality and everything. So we took on a big wave of clients. I was working really hard. We didn't yet have much support in terms of other people that we had recruited to help us on projects. So it was like, just having to do, work really hard, long hours. So we decided to slow down on the growth side of things. Like, whoa, we've got too much. Like, let's take the foot off the gas. So we were able to execute on that work, but taking the foot off the gas led to, like, a downstream slowdown, like, a few months later. So they're really busy, and then we didn't keep up the tempo on the BD side. So that by the time like around Q4 last year came around, it's like, okay, we still have work to do, but we've sort of flatlined on and gone down a bit on revenues because we took our foot off the gas on business development, like, in Q3. So in Q1, or like December, this just passed, we put our foot back down again, and, like, almost straight away we got a bunch of projects, coming in, and we're really busy again. So that's a good signal that there's the demand that is out there, and it's if you push for it, you can get it. But we still have to manage, like, what we can actually execute on, right? Because in this line of work, it's not, it's professional services, right? So there's only so much hours available to do what needs to be done. So we just have to manage, how we're pushing on growth with the resources that we have available to deploy.
Makes sense. So I have a follow-up question on that, Derek. So how did you outreach your clients? The most difficult challenge, what happens, like, when you start some new venture, you just don't know, like, whom to reach out, how to target the customers. Like, how did you started building your client base? So that will
Yeah.
be really interesting insight if you could share.
So for us and for our business model, it's really, the way we're doing it is, we're cultivating relationships that can act as almost like a flywheel for us. So in this line of work, it's really primarily VC funds, where they have a portfolio that they're managing, where they see problems in their portfolio. It's like, they need some help on the finance side. They need some help on the capital market side. So we cultivate the relationship with the investors, and then they make a recommendation or a suggestion or an intro in to their portfolio companies. And then we get going that way. So it's sort of targeting these nodes that, where our efforts are not one-to-one, right? Like, if we can get a VC which has 100 fintechs in their portfolio, then that's like essentially a 1 to 100 endeavor, right? So that's the primary business development motion, is like VC relationships that we have. And they bring us into their portfolio, but they also bring us into people that they've talked to, but maybe they're not going to invest in because they can see that they're not ready, but would benefit from our services. Then they just kind of introduce us, and you get that kind of curated pipeline, which has quite a high conversion rate if you think about the sales funnel, because someone's already identified that they have a problem that we have a solution for, so it's just getting connected to them. But what else? I think part of the tactics also is like when we talk to people, they totally get it. They understand what we're doing and why it's valuable, but we're not necessarily like front of mind. So a lot of it is just timing, right? It's like send a little follow-up, and they, if on that day or that week they were just talking to someone that had this problem, then they think about us, right? So it's sort of just reminding people that we're here and what we're about.
Okay. So what I understand is like you have built your client through building a personal relationship with them, like understanding their problem, reaching out to them, and that's how like you're able to like, get clients and able to expand it further.
Yeah, I'd say it's like warm introductions.
Oh. Awesome. So I think my another follow-up question was that how do you maintain a long-lasting relationship with the client? Like for example, if you have like 5 clients right now, so how are you able to keep them happy and maintain that relationship that they're gonna be with you in a in a longer term?
Yeah, so it's being establishing that trust, and a little bit of maybe a dependency, right? Or you're always there for them, and you always help them out, and you always get them out of a whatever problem that they have. You have a solution for it, so you become one of their trusted partners and advisors. And it's not like it's fractional, like you're doing stuff every day, but you're there for them when they need you. Which is why they're not paying for a full-time person. They've got a fractional person, which it's kind of on demand. If there's a problem, call us, and just like every other time, we'll sort it out for you, right? So having that, you're giving them what they need at relatively like low cost, right, compared to having a full-time person. So trust, make sure you deliver results, maintain quality, do what's expected of you, or more, right? Like exceed expectations on your execution. Be proactive in helping them, right? Like a lot of the time I'll see something from another project which is maybe interesting on another one, or I'll make a connection at a conference, like, hey, you should talk to one of my clients would be really interested in talking to you, and like proactively making intros and helping them move forward in that way. It's not just reactive. If the client asks for something, I'll do it. It's like you're in their corner, and they feel like and know that you are in their corner. In terms of being able to do multiple projects, so I've got some clients that I've been with for like 2 or 3 years now, but more recently, the way we're doing it is like I would start off on a client, maybe with someone supporting me, and then after the first couple of months, like the person who was supporting me becomes more the central person, and I'll move on to like the next one, build it up, hand it off. So I'm still involved on the relationship side and on like quality control and available for escalations, etc. But usually there's someone else that I've put on that's on point for that project.
Awesome. I think that was really very insightful. Now I'll move on to our final segment of questions. This is one of my favorite question for sure. Like based on your journey, like what advice would you give to employees who aspire to, to start their own firm and become CEO? Like, if you could share some like, key steps which would be really, some kind of do's or don'ts, like something of that sort.
Yeah, I mean, it depends on your risk appetite, I suppose, right? Like for me, the first risk transition was from corporate into startups, right? I had, a house with a mortgage and 3 kids, and, I had to some stuff, no money because I paid for the MBA, right? So it's like I couldn't afford to take the same risk as someone, with no kids and no mortgage, and right, and who can work 100-hour weeks and don't have to, don't really care about the relationship side of things. So for me, I had to be more mindful of what I did next, right? So when I went into the startup, things that were important for me were like, is this a business problem that I feel like that I understand and can add value? Is this a leadership team or a partner that that I trust and want to work with? Like, so de-risking the relationship aspect of a new endeavor. And then like, in the case of the startups, like, is this, are they well backed by solid investors? And they had some big name brands at the time. So I was like, okay, good management or good team that I'm going to be a part of, a business problem that I believe in and have some experience in, and like good resources that kind of de-risk it for me. When going from startup into my own business, like I said, it was a bit more gradual. Like my side hustle became my main hustle. I still had a leap of faith to make. And me being on the slightly more conservative side of the risk spectrum, right? Like I said, I got family and all that. Like I couldn't live a year without an income, right? For example, or paying myself, just a couple of $1,000s a month or something. Like I need to maintain where I kind of roughly where I'm at. I can't cut too deep. So that's why I built it up as a side hustle, so that I could sustain myself on the side hustle and then moved over.
So Derek, like, could you tell us about your future plan with ScalePoint Advisors? Like, how are you planning to keep up with the emerging technologies, like with, with AI and automation? What's your thought on that?
Yeah. So in the service that we're providing, we have to stay on top of these things because they're important in, people are going to expect us when they bring us on as a CFO or a capital markets service provider that we understand the business models associated with these new technologies, right? So we have to get really competent at and comfortable with, emerging technologies and what it means for different types of business models, because the business model is where, we have to put some numbers around and, help kind of translate that vision into financial projections, etc. So we have to stay on top of developments. In terms of using technology in our own service offering, I'd say not so much, not that critical for us, because we're more like advisors, right, rather than doing a repetitive task that can be automated.
Thank you so much, Derek. Do you want to give any last piece of advice to our audience?
When I started off with PwC, it was easy to envision, staying with PwC and going up through the partner track, and like that's what a lot of people wanted. Whereas what actually happened was I ended up going into emerging markets, and then, the MBA and everything. It was very, in the one sense, it was like each step was quite logical, but in the other sense, like if you were to go back to being a trainee at PwC, like that this was how my career would develop, like it would sound really like fantastical, right? It's like how is that even possible? So I guess just being open to different possible pathways, right? Like your career doesn't have to be a straight line.
Awesome. Thank you so much, Derek. It was really wonderful having you on our show. And thank you so much for your wonderful insight and sharing your journey with us. I'm sure our audience are going to love it and they're going to learn something out of it for sure. So thank you so much.
All right. Thanks a lot.